The banana zone is that period in crypto markets which you would call altcoin season. It's when everything just starts going vertical. Now, it always comes in the US election year because of this cycle, which is the Bitcoin halving cycle, which is this everything code cycle. And it tends to come around the summer or autumn of that year, and things start accelerating and get silly. And when prices start going bananas, and they look like the banana. So there's some charts that I've shown on Twitter where, you can see the banana zone there on the left side of the chart. The prior banana zone is when suddenly you get consolidation, it goes up a bit, consolidates, and then it just goes bananas.
Real Vision founder and CEO Raoul Pal and global macro investor have upgraded their Bitcoin, Solana, and Ethereum price projections, calling them battle-tested protocols. Friend thinks Bitcoin will double or triple from $69,000. Solana estimates are less conservative. He expects the Solana blockchain platform's native currency, which uses proof of stake to enable smart contract capabilities, to climb 47x from the previous cycle's lows to $750 to $1,000 per coin. He believes Ethereum could easily reach new highs until the bull market finishes in 2025. Pal advises against projections owing to the economy's volatility and macro instability. This prognosis seems plausible to him. He thinks Bitcoin is stable since he's experienced bull markets. Pal's strong crypto bull market theory. Pal said the market trusts his cowbell, or quantitative easing, projections. The 2008 global financial crisis and central banks' efforts to save the economy showed they would always have to manufacture money. This is why all of the world's major C banks do periodic QE, which will continue as long as the existing financial system continues with unlimited bells and Bitcoin and Ethereum ETF hype. Pal is confident that the cryptocurrency sector will thrive in the next 12 to 18 months. Former Goldman Sachs executive talks Solana and Ethereum prospects and price expectations.
Been repeating every single time since crypto began. So this is the Bitcoin halving cycle. It's that chart. That chart is the chart. That's why it looks like a banana. It's just like, it just does this. And it's why we're all in crypto, to be honest. In it for the bananas. No, the bananas that are a function of the tech.
Okay.
In the end, the more people build on it, the more. If you abstract this all away, what are we doing here? We've been given the new layer to the internet, which is the internet of value, the layer of ownership, settlement, all of this stuff. Now, unlike the internet, we couldn't own that. We can own this. So the more it gets used, the more the number go up, and the more we profit from it. So it's this huge egalitarian, democratic way of distributing a huge amount of wealth to a huge number of people. To put it in perspective, this space is a $2.5 trillion space today. By the end of this cycle, it should be $10 to $15 trillion. By 2032, if you continue growing at these kind of rates, you get to $100 trillion. So there's $97.5 trillion of money on the table, which is why I keep telling people not to fuck this up, because the opportunity is so big. And that is just by owning the new internet, essentially. So that's what this is all about. So there is a banana zone, which is the periods of time where it goes bananas. Then we get the corrective periods, and then we repeat this cycle again. Now, will everything repeat perfectly? Will it be identical? No. There's no guarantees come with this. But it's based on the liquidity cycle. It's based on the macro cycle. It's based on interest rates. It's based on a lot of things. So if you think of what liquidity is doing, why the central banks and governments are injecting liquidity, it's to be able to fund the debts. We're in the big debt funding cycle this year, which is why the banana zone happens and why the everything code cycle, all of this happens. They have to fund all the debt. And so they inject liquidity into the system. They do it via rate cuts. They do it via the reverse repo. They do it via quantitative easing. They do it by any mechanism they can to roll the debt. And that's Europe, the US, China, Japan, the UK, everybody, right? So they all do the same game. So they're all teeing up. They've been waiting for inflation to come lower, ready to start hitting the accelerator. Liquidity has been rising, which is why the markets have been rising. But it gets to the phase where it has to go up a lot to finance, $10 trillion of stuff that needs to be financed. So that's all to come. And that tends to happen this year and next year.
From the start of the Bitcoin bull market, Raoul Pal, CEO of Real Vision, has had a simple message for investors: don't ruin this. He says it in more colorful language, though. There has been no doubt in Pal's mind that doing either of these things to make more money is a good idea. If you make the wrong moves, you'll lose a lot of money on your tokens. While Pal knows that using leverage to make more money is helpful, he warns that the cryptocurrency market is too unstable for such moves, especially for people who are just starting out and getting used to everything. Pal's main piece of advice is to put most of your money into top crypto assets like Bitcoin, Ethereum, and Solana, and not so much into the crazy world of meme coins and NFTs. In the same way, he stresses that meme coins are a part of the crypto culture, as battle-tested coins like Doge and Shiba Inu have shown over and over again. Let's go back to the video.
You're in an election in South Africa right now, and what every political party does around elections is give out candy to the kids. Right? Any way of giving out some form of stimulus to try and say, well, those guys looked after me, I feel good now. So if I look at even the business cycle, all my forward-looking indicators are like it's turning up quite sharply in the US and globally. So by the time it gets to the US election, the US economy is going to be expanding again. Inflation will be less of a problem. Interest rates will have come down. They'll have they've cancelled some student loans. They'll find some other way of giving money
all of
to
that's...
people. Your parents care about crypto. That's the age of these people. I mean, they don't really care, but they care about the voters. And look, Coinbase has 108 million accounts, of which right now maybe 10, 12 million are active. As you start going to the banana zone, that starts going from 10 million to 20 million to 30 million. So suddenly it becomes a lot of voters. Add that to the political power of the firms that are involved in the ETFs, and it's now actually a funding issue for these people as well. Because if they say the wrong things, then the big financial sponsors for their super PACs start applying pressure. So I think it's much more of an issue than they first realized. And I think Liz Warren made a fatal mistake of saying we're building an anti-crypto army without realizing you're fighting a bunch of degenerate meme artists who are native to the internet, who are distributed everywhere. That's not an easy battle to take on. And I think they're starting to realize that this could be their own goal, because obviously RFK as well is running on a pro crypto format. So the Democrats, they either have to kind of fall in line, or they're going to try and say, we are the party that stands against this. But who does that play to? They're not going to get the swing voter by doing that. And I think this is typical of an election cycle, is suddenly it's going to become super important to these people, just because it's, in an election which is very 50-50, anybody who can swing the vote matters.
Raoul Pal, CEO and co-founder of Real Vision, has given investors more good advice on how to get ready for what he calls the fourth industrial revolution, or the exponential age. Pal said he understood how important the new age was when he saw a few things. We never thought it was possible for central banks to print so much money. Printing too much money by the Federal Reserve and other central banks has pushed up the prices of assets, making it look like a bubble. However, none of these technologies are really in a bubble. It just looks like one because the dollar has lost so much value. Pal's conclusion from all of this is that the prices of technologies will continue to rise at an exponential rate over the next few years. In fact, the former Goldman Sachs executive thinks we only have 6 years to make as much money as we can from the crypto market before it all goes crazy and the world stops being recognizable. Please share your thoughts, comments, and observations on the video in the section below, and don't forget to give it a thumbs up. Sign up for the channel and turn on alerts. Please click the bell to see more movies like this.